Hello, and welcome to CMS Forex News. I'm market analyst Nick Nassad here with today's report. It's Thursday, October 30th, 2008. We start in New Zealand, where the number of building approvals rose 8.4% in September, undoing the 6.7% drop in August. Business confidence, as measured by the National Bank of New Zealand, however, saw sentiment plunge in October. The survey saw pessimism across all sectors and saw a net of 42% of respondents forecasting deterioration in business conditions in the coming year. Only a month ago, this level was at 1.6%. Stocks in Asia and Europe rose for a third day, helping to continue a sense of risk appetite in the Forex markets, which pushed the New Zealand dollar-yen pair to the 59.50 level. The main Japanese index was up 10%, so the Asian session saw a third leg to the recent rally. After reaching resistance at 59.50, the pair fell back slightly in New York trading. In the UK, housing prices are down 1.4% on the month and 14.6% on the year, according to Nationwide. That's the 12th consecutive month that prices have declined, and the number of transactions as a percentage of the total mortgages is at its lowest level since the series began. Though prices have dropped significantly, consumers are expecting them to fall even further, while sellers are not necessarily heeding that call. The result is a stalemate in which there are less transactions. In Germany, the unemployment change showed a decrease of 26,000, beating expectations and helping to inch down the unemployment rate to a seasonally adjusted 7.5%. The number of total job seekers fell below the politically important marker of 3 million people. The European Commission's Index of Executive and Consumer Sentiment dropped 7.1 points to 80.4 for the October period. That was a record drop for the index and reflected weaker confidence at all levels: services, industrial, and consumer. Consumer confidence fell 5 points to negative 24. The overall index is now at a 15-year low, and its sister release, the Business Climate Indicator, was also grim. The Eurozone economy was feeling the strain of higher credit costs and weaker global demand even before this most recent bout of the financial crisis, which intensified in late September. The Euro-Pound pair slid about 120 pips off its intraday high near 0.8010 during the European and New York sessions, as the European data weighed down the euro against the pound. The pair has been moving in the pound's favor this week, after it had tested its all-time high near 0.82 last Friday. In the U.S., jobless claims for the week ending October 25th showed a number of new claims hovering around the 480,000 level, which is an elevated amount consistent with monthly job losses. The advanced release of third quarter U.S. GDP showed growth was down at an annual rate of 0.3% compared to the second quarter, a sharp drop from the 2.8% increase seen in the second quarter. With credit harder to attain and the economic outlook rocked by the financial crisis, consumer spending fell by 3.1%, the largest drop since 2001. Spending on non-durable goods like clothing and food fell 6.4%. The decline in consumer spending was offset somewhat by a narrower trade deficit and a smaller decline in inventories. That actually put today's headline number above the more pessimistic forecast of a 0.5% decline. Still, with the worst of the financial crisis intensifying in late September, the data bodes ill for the fourth quarter number. The euro-dollar rose overnight, testing the area around 1.33, but was turned back in New York trading. The pair receded half of the recent three-session rally, finding support at 1.28. Stocks in the U.S. moved up at the open, retreated midday, then finished solidly higher as investors mulled the economic slowdown and await next week's jobs report. The prices that producers receive when goods leave their factories fell 1.2% in September in Canada. This follows a much smaller 0.1% decline in August. Inflation may not be as strong a concern for the Bank of Canada if those price drops filter through to the retail side and ease consumer prices. The decline in prices for petroleum products was the main catalyst behind the fall, but metal prices were down as well as global demand faltered. The US dollar-Canadian dollar tested the 1.19 level overnight and then gave up part of its gains in the New York session. This week has seen the pair drop in favor of the loonie after testing key resistance at 1.30. Tonight, Japan releases data on household spending, manufacturing activity, consumer prices, employment, and housing starts. The UK posts its consumer confidence data, and Australia releases data on private sector credit. Overnight, Germany releases retail sales, and the Eurozone posts its flash CPI data for October. Tomorrow, the US releases data on personal income and spending, its Chicago PMI, and the UMich consumer sentiment. And that's it for today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.